Gold is testing the 4,400 level. But here's the real question. Will gold break above this zone, or is a sharp correction coming? Most traders miss gold's biggest moves because they don't understand the deeper forces driving this market. In this breakdown, I'll show you how smart money is positioning, the 3 key macro forces shaping gold's next move, and my precise trading roadmap for the week. Stay with me till the end. This could change how you trade gold. Macro outlook. 3 key forces driving gold. Force number 1, the US dollar dynamics, DXY. The dollar remains the most important counterforce to gold. Here's what you need to know about DXY. DXY technical analysis. Starting with the weekly chart. The DXY continues to consolidate within a broad 96 to 100 range. This week's candle formed a bullish pin bar, which is technically constructive. There is a high probability that DXY will continue to recover toward 98.6 to 99 area next week before undergoing another corrective pullback to retest the lows and then potentially resume its recovery. On the daily chart, after printing a strong bullish pin bar from the 97.50 support, DXY has recorded 3 consecutive positive sessions. Price is likely to extend its rebound toward 98.6, which aligns with the previous swing low and the MA20. This zone is expected to act as a significant resistance, increasing the likelihood of a pullback to retest the bottom before any meaningful breakout occurs. Zoom in to the H4 chart. On the H4 timeframe, DXY remains within a rising channel and continues to recover steadily. However, price is now approaching the key resistance zone at 98.4 to 98.6, making it difficult for DXY to accelerate higher. As a result, the risk of a short-term pullback remains elevated. Here's the catch. DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. The dollar is the battlefield where gold reacts first and everything else follows. Force number 2, geopolitical risks. While DXY drives the immediate moves, geopolitics remain the deeper structural force supporting gold's long-term strength. Recently, tensions along the Thailand-Cambodia border continue to escalate, with both sides launching military strikes despite a prior ceasefire agreement. The US deployed F-35 fighter jets and additional military assets near Venezuela. Caracas responded immediately by activating its S-300 air defense systems, reportedly prepared to engage any US aircraft. This isn't just political noise, this is a clear escalation in global tension, and gold consistently reacts to these developments. Russia-Ukraine peace talks have shown some progress, but no agreement has been reached. Until a concrete resolution emerges, uncertainty will continue to support gold as a safe haven asset. Now let's look behind the charts at the institutional flows shaping gold's next move. Finally, institutional activity. While retail traders are still debating whether gold has already peaked, institutional players tell a different story. Gold trusts were largely inactive over the past week, suggesting that institutions may be waiting for a more favorable opportunity. Their likely objective is to concentrate capital and push gold decisively above the 4380 to 4400 resistance zone, opening the door for a stronger upside move. Most importantly, they have not unloaded any significant portion of the gold accumulated earlier. Both the weekly and monthly charts confirm this behavior, signaling that the fund still expects higher gold prices in the medium to long term. When capital of this magnitude shifts, retail traders often get trapped chasing moves too late, and that's when the real game in gold begins. These activities indicate the fund is positioning for a move toward the 4400 zone, with potential extension to 4700 to 5000 before taking profits. The approach also helps hedge against a possible Ukraine peace deal and a potential rebound in the US dollar. Now that we understand how capital is moving, it's time to turn to the charts. Let's zoom in and see what gold is really telling us. Gold technical analysis. First, congratulations to everyone who acted on 6th December analysis by buying near 4170. they're now enjoying gains exceeding over 2,000 pips. We called this move from 3,900 before it even started, and that's the power of understanding market structure. We shared lots of setups earlier in our Telegram group before market move. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now, let's zoom in on the charts. Weekly, daily, H4. Step by step, here's what the market is really showing us. Starting with the weekly time frame. Since bottoming at 1,600, gold has surged to 4,400, a move of nearly 28,000 pips. This move was fueled by four converging forces. The dollar's drop from 114.6 to 96, geopolitical risks in Ukraine and the Middle East, trade tensions under the Trump administration, fiscal risks, government shutdown in Washington. Ask yourself, how often do we see such perfect alignment? It could take more decades or never happen again. At this stage, peace in Ukraine remains elusive. Tensions between the US and Venezuela are escalating, undergoing central bank accumulation, and global markets have yet to find solid footing, all of which continue to support gold's upside momentum in the coming weeks. However, a strong rebound in the US dollar, DXY, could easily trigger a sharp correction in gold from current levels. On the other hand, if DXY continues to consolidate or weaken, gold is likely to rebound toward 4,400. A decisive breakout above this level would open the door for a move toward 4,700, 5,000, and potentially higher. On the weekly chart, gold continues to print bullish weekly candles, closing above the previous week. Notably, the last two bullish candles have shown extremely large volume, the highest on record. If the 4370 to 4380 area were a major top, such strong volume would be unlikely. Instead, these bullish candles have clearly overpowered the prior corrective bearish candles. Price is currently consolidating within a triangle pattern, with buyers increasingly pressuring sellers through higher lows. A minor pullback next week is possible before gold breaks above the 4380 resistance, targeting 4,400 and higher. Shifting down to the daily. Now let's look at the daily chart, the clearest window into gold's next move. Gold remains within a clear ascending channel. As price approaches the previous highs at 4350 to 4380, the market is consolidating in a wide range between 4260 and 4380. If gold fails to break decisively above 4370 to 4380, a corrective move toward the 4250 to 4270 support zone is likely, which would help build momentum for the next strong bullish leg. So, let's zoom into the H4 chart, where things get even more interesting. On the H4 timeframe, gold briefly closed above the key 4350 congestion zone, but was quickly followed by a bearish candle closing back below 4350. This confirms that profit-taking and selling pressure remains strong around the 4350 to 4380 resistance, especially while DXY continues to recover. As a result, gold is likely to continue consolidating between 4,300 and 4,350 for some time, waiting for DXY to weaken before attempting another breakout. If price breaks below 4,300, gold could extend its correction toward the strong support zone at 4,270 to 4,280, from which a renewed bullish rebound is expected. This structure gives traders a clear multi-time frame view. Overall structure remains bullish, with the current pullback seen as a healthy correction within the uptrend. All of this leads us to the key question: why consider buying gold at this stage? Gold stays in a strong bullish cycle, supported by institutional demand, ongoing central bank accumulation, and solid technical setups. However, the DXY rebound remains a key headwind to watch. Let's turn that analysis into a practical trading plan, the exact playbook I'll be following for the week ahead.
Trading Plan, December 22 to 26, 2025. First buy zone, 4150 to 4205. Round number plus rising trend line, probability approximately 99%. Stop loss, 4147. Targets 42.27 to 42.47 short, 42.87 to 42.97 mid, 43.47 to 44.97 long. Second buy zone 42.50 to 42.85. H4 breakout, round number, rising trend line. Probability approximately 90%. Stop loss 42.47. Targets 42.97 to 43.17 short, 43.47 to 43.77 mid, 43.97 to 44.97 long. Pro tip: false breakout? Wait for the retest, re-enter for clean profits. Remember, probabilities don't guarantee outcomes, but they keep us disciplined. Breakout buy. Wait for H4 close above 4,400, then buy. Stop loss 43.87. Targets 44.17 to 44.27 short, 44.37 to 44.47 mid, 44.57 to 44.97 long. Gold doesn't move randomly, it reacts to real global shifts. Don't miss the next big move. Opportunities like this don't come often. Subscribe now and join our community for real-time alerts and exclusive insights you won't find anywhere else. Master Gold, master the market. This is not financial advice.